pause for 1 second.
Where's the
pause for 1 second.
Where's the
Okay,
message thing? Good morning, everybody. I think we're live now. And welcome to today's webinar. There is a chat feature in
upper
in the
right of the screen.
Upper right, if someone wouldn't mind just confirming that you can hear us, so we know we're actually speaking to somebody, that would be great. But in the meantime, we'll assume that we are and get going with it. I'll start with some introductions. My name is Greg Leslie. I'm a tax partner in Baker Tilly's office in Dartmouth. Along with me on the call is Lori Messenger, who's a manager in our tax group, and Dan Nordquist, who is a senior manager in our BT Advantage Accounting Services group. Excuse me. The purpose of today's webinar is really an update from one that we gave last Monday, where we went into some detail and depth on the both level of government's COVID relief measures. Those of you who attended that webinar will know that on some of these items, there were some things that were up in the air as we were waiting for more information and legislation. So you'll see our disclaimer here, that is details that what we have to discuss today is based on what we know today, actually last night, April 16th. So anybody who's listening to this webinar on the playback, keep in mind that the effective date for this was April 16th. Okay, so with that in mind too, I would direct you to listen to the playback of last week's webinar, but do keep in mind, kind of listen to that with a discerning ear, and that some of that information is now out of date, thus prompting us to do this webinar today. So I'll start with some new things we've learned about the Canada Emergency Response Benefit. So the Canada Emergency Response Benefit, or CERB as we've taken to calling it, just so everybody's clear, this is the $2,000 per month benefit that you can qualify for if you had at least $5,000 of total income, either in 2019 or in the 12 prior months, and if you find yourself now out of work. A couple of things that were uncertain when we first gave the seminar was, in particular for small business owners, could you meet that $5,000 a month threshold if you had received dividend income instead of a salary from your own company? We've since gotten clarification from the government that if you'd received $5,000 of dividends, then you can indeed, at least $5,000 of dividends, that you can indeed qualify for the CERB, provided those dividends are non-eligible dividends. So this is where the wording gets a little funny. A non-eligible dividend means you're eligible for the CERB. Non-eligible in this context obviously doesn't refer to the CERB, it refers to something else. Basically, a non-eligible dividend is a dividend that's paid out of small business income from the company, small business income that was eligible for the small business deduction. So most small business owners who have, a small business as you would understand what a small business is, and pay tax at the low small business rate on their income would pay a non-eligible dividend to the owners. And that type of dividend would qualify for this $5,000 CERB test. We do find ourselves still with a little bit of uncertainty for unincorporated businesses, for sole proprietors. A sole proprietor might have $5,000 of gross revenue, but after deducting all their expenses, would have something less than $5,000 in net income. So the question is, which measure matters here? Is it the gross revenue, which is over 5,000, or the net income, which is less than 5,000? Now, I've heard certain commentary where people are taking a position on this and saying, no, it's your gross revenue. I don't think I'm quite ready to stick my neck out on that and say for certain that it's a gross revenue test. We certainly haven't heard that straight from the horse's mouth, being, say, the Department of Finance. And usually when the term income is used for income tax purposes, income refers to something on a net basis. So I think for certain sole proprietors who are able to deduct enough from their income to get their net income to below 5,000, there's still a little uncertainty as to whether you could qualify for the CERB.
Greg, can I throw something in there? Just
absolutely.
a thought or a question. My concern there is that people might have assumed gross revenue was the right measure when they were calculating the eligibility requirement for the $5,000, but now want to rely on the net income when it comes to earning income during the periods. So whatever stand you take, and again, we're not really willing to put our necks on the line here, but I think, whatever you do for one, you have to do for the other.
Right. Yeah. So a little consistency applied would be certainly a best practice. The other spot where we had a little bit of uncertainty related again to self-employed applicants, in that one of the criteria for the CERB from the get-go was that you were supposed to have ceased working, and you were supposed to have ceased working for, excuse me, a 14-day period. So that, indicates, a period of idleness. And most small business owners will know that you're kind of on the clock 24/7. And even in these times when your doors might be shut, you're usually still keeping tabs on something or other. And is it possible to say that a small business owner actually ceased working for a 14-day period and ceased earning income? So the government was kind of aware of this, and recently, very recently, in fact, just 2 days ago, the Prime Minister announced a measure where they would concede that you can earn up to at least $1,000 per month and still qualify for the $2,000 CERB benefit. So there is a potential to have a little bit of income, which would seem to imply that you're doing a little bit of work too, and you haven't completely ceased working, and you could still qualify for the CERB. However, just for fun, I looked at the CERB application online this morning, and when you make the application for the CERB, you have to attest to certain things. One of the things that you have to attest to is, and I'm reading this somewhat paraphrased, is you have stopped or will stop working for at least a 14 consecutive day period, and you have received or expect to receive no more than $1,000 in combined income. So it's saying both things at once. One, that it's okay for you to receive up to $1,000 of income, but it is still referring to stop working for at least 14 consecutive days. So it seems to apply that there still has to be this period of idleness in order for you to qualify for the CERB, which might be a tough thing for a self-employed person to be able to say. So I think finance has received some comments back on that sort of predicament, and we'll see if they have another fix for that. I would mention now that the application has been live for about a week, and as long as you have my account set up with CRA, it seems to be going pretty smoothly, and taxpayers are having some success getting through the process and applying for the CERB. So that's what's new on the CERB. We'll move on to Lori. You have something else to add?
I'm going to throw a question in there on the non-eligible dividends. So dividends are in terms of the 5,000 eligibility requirement. Do you think they're going to kick people back out of CERB if they're receiving dividends during any of the 4-week periods? Is that going to be also considered part of income?
Well, I would think that it's going to be subject to that $1,000 a month limitation, that they've given us that wiggle room, so to speak, so that as long as you draw no less than $1,000 of dividends, you could still qualify for the CERB.
Seems reasonable.
Yeah. Again, I think we still have to keep an eye on what it actually means to have ceased working, and whether we do need to demonstrate that there's been 14 consecutive days that you truly were idle.
Agree.
So the wage subsidy, the Canada Emergency Wage Subsidy, is probably the biggest piece of the legislation. It's probably the richest piece of the legislation as well. So it's likely of most interest. And again, another disclaimer, in our previous seminar, the problem at the time was we didn't yet have the legislation. now we do have the legislation. Of course, it could be subject to change after today's date, so I would remind people to stay current after today's date on any potential changes. The wage subsidy that we're talking about, just to be clear, the Canada Emergency Wage Subsidy is the one that provides coverage on up to 75% of wages to a maximum of $847 per week per employee. There's another lesser wage subsidy as well that's still out there, but in this context, we're talking about the 75% one. As I mentioned, the legislation passed on Saturday, April 11th. It went through the House and received royal assent that day, and also was published, so we were able to actually read the legislation and figure out some of the finer details. The government also published a backgrounder, which is available on the Canada.ca website, that kind of takes the legislation and puts it in a more accessible and readable format. So this wage subsidy is the one that's based on the drop in revenue. Originally, we were told that you would need to be able to show a 30% drop in revenue for each of March, April, and May in order to qualify for this subsidy. And by the way, this subsidy is alive and available for the months of March, April, and May. One thing that they've since changed in the past week is for the month of March, they decreased that 30% threshold to a 15% threshold. And this is sort of on the feeling that, well, the crisis only hit us about halfway through March, so perhaps you had a good first 2 weeks of March and a bad second 2 weeks of March. So now you only have to meet a 15% wage or revenue drop for the month of March to qualify. To make the revenue comparison, we were told and we're still expected to continue to use our normal revenue accounting methodologies in order to compare our revenue and to determine if we do have such a revenue drop. We're supposed to exclude revenue from non-arm's length sources, extraordinary items, and capital gains as well. That hasn't changed. One thing that has changed, though, is we're now allowed to calculate our revenue based on either a cash basis or an accrual basis. So we get a bit of a choice. We can use one or the other, not a combination of both, but one or the other. And also, when we pick a method, whether it's cash or accrual, we have to stick with that method for the duration of the program. But there is a little bit of flexibility there in determining how you calculate your revenue. The other major change that we have now learned is on the benchmark for the comparison of our revenue. Previously, we were told to compare March 2020's revenue to March 2019's revenue, and this April's revenue to last April's revenue, and the same thing for May. But now we're told that instead of comparing the current month to the same month last year, we can also compare the current month's revenues to an average of your January and February 2020 revenue. This is going to help businesses that perhaps were not in existence last year, startup businesses that don't have experience from last March, April, and May, or could help businesses that have been in a growth mode. So you might be up this March from last March because you've been growing, but you're down from this January and February because of the crisis. So for a business like that, you can use your January and February average revenue, compare it to your current month, and if you're down 30% from January and February, you will still qualify for the wage subsidy. So that's some good news for certain businesses. One other thing that's not on the slide exactly, but another rule that they just recently added is if you qualify for March, last month, March, because of a revenue drop in March, you also automatically qualify for April. So you don't have to redo the math for April. And also, if you qualify for April because of a revenue drop in April, you will automatically qualify for May. So this removes, I think, an administrative burden on taxpayers to keep proving that they qualify, for one thing. And it also provides a bit of incentive to get back to business if you're able to get back to business. So if you had to shut down in March, but as you know, things maybe start coming out of the crisis, if you're able to get back to business in April and May, you can do so with perhaps not impairing your ability to qualify for the wage subsidy. One important thing to remember on this is, again, if you qualify for March because of a revenue drop in March, you automatically qualify for April. That doesn't also mean you automatically qualify for May. In order to qualify for May, you either have to qualify for March based on, or qualify for April, sorry, based on its own merits because of a revenue drop in April, as opposed to only qualifying in April because you also qualified for March. Hope that makes sense. But in other words, you have to qualify for the previous month on that previous month's own merits to qualify for the next month. So next slide, I think.
Okay, actually, can we stop for 1 second? We do
sure.
have a first question here too, and it's in regards to revenue from the US and Canada. So the question is, what if we generate revenue from the US and Canada? How do we determine what revenue to use in the calculation for the 75%?
Okay, so there's revenue. There's a Canadian test to the revenue that you earn. But if you're earning revenue, say, from US clients based on services you're performing here for US clients or things that you're exporting to US clients, as opposed to actually being on the ground in business in the US, then that revenue should count towards the math.
Yeah, it's interesting to me that they used the words "in Canada" in the legislation, not business carried on in Canada or something that we're used to seeing in the Income Tax Act. But I agree with Greg. It seems to me that if you're selling from your Canadian location within your Canadian business, that those revenues do not need to be excluded. But on the other hand, if you have some sort of operations happening out of another country where you might be doing business in the US, for example, either feet on the ground, having an office there, some third party or intermediary, that those would need to be excluded. Greg, I've got a question for you, or a question that we received in advance on the revenue decline. Stephanie asks, are we sure that we're in for April if we're in for March? She had attended a session recently that was quite certain that if you qualify for March, which allows you to qualify for April, but then determine that you didn't have a 30% decline in April, you'd have to pay back the wage subsidy. My understanding is that in for March means in for April, and it's a bit of a gold ticket, but that if you later discover that you don't qualify for April, you can't use that as the basis for qualifying for May. May would have to qualify on its own merits. Do you agree with that?
That's right. That's right. To look at the prior month to determine if you qualify, the test is, did you qualify in the prior month on that month's own merits?
And I think we've got a couple of similar questions. Dan, maybe you can take a peek there.
Sure. So I have one more question here. So it states, if I use January and February averages, does the drop in revenue have to be 30% or 15%?
Well, for March, your March drop off has to be 15% from January and February. But then for April and May, that increases to 30%.
Yeah.
So it's a different test for the 3 months, or March is different from April and May, I should say. But you're comparing each of those 3 months, March, April, and May, to your average of January and February.
Right.
Yeah.
Okay. One more question here from the Q&A. So do you qualify for April automatically, even if your March is only down 15%, where the April threshold is 30%?
Right. That's correct. If you qualify for March based on the test that's in existence for March, you'll automatically qualify for April.
Okay, great.
A few other additions to the wage subsidy rule. One is a special rule that applies to what they're calling an affiliated group of companies. So as an example, imagine you had 2 companies, both companies had payroll, and you'd like to get the wage subsidy for both companies. Now, let's say one company's been really affected by COVID and its revenue's way down, but the other company's been holding its own and it's okay. So ordinarily, one of those companies would qualify for the subsidy and the other one wouldn't. But what you can do instead is consolidate your revenues for both companies. And if on a consolidated basis you meet the test, whether it's 15% drop off for March or 30% for April and May, you can use your consolidated results to qualify both of your companies. So essentially, you're kind of able to average both of your companies' results together to determine if both companies qualify. So the payroll function in the company that's holding its own may be able to qualify for the subsidy by virtue of the drop-off in the other company. So I think the question then is, well, what's an affiliated group of companies? That term is a little bit ill-defined by the legislation, but if we look at what the normal meaning of affiliated is for income tax purposes, affiliated is a technical tax term. It basically means a company that is under your control, your spouse's control, or some combination of the two. So any companies that are controlled by some combination of you and your spouse would be considered affiliated, and you can consolidate the results of those two companies for the purposes of making these revenue determinations. If you elect to do so, you can do both companies on their own merits, or you can affiliate them. It's your election and your choice to consolidate or not. There's a little bit of relief for certain employers who have to pay the CPP and EI portion of wages that they pay to their employees, and it works something like this. If you have employees that you've brought back on payroll on what amounts to a paid leave, in other words, you're keeping employees on payroll because the wage subsidy has allowed you to afford that, but they're really not making or generating any revenue for you. So you're able to do that because the wage subsidy is covering some or all of their wages. However, as an employer, you're still on the hook for their CPP and EI premiums, at least the employer portion of those two. So there's still a net cost to the employer to hire these employees back, even though they may not be making you any money. So the fix that was introduced was that through the process of making your wage subsidy application, you'll also be able to apply for a refund of your CPP and EI premiums for those employees that you are paying, even though they're sitting on the bench, so to speak. A quick word also about how the wage subsidy interacts with the CERB benefits. What we have learned is that an employer is not supposed to get a wage subsidy with respect to a certain employee who's also getting the CERB with respect to the same period of time. The problem, I think, for employers is the CERB application is done on an individual basis. So your employees might be doing that on their own without you policing it or without you knowing about it. However, as an employer, you're not supposed to get the wage subsidy if for the same period of time your employees are getting the CERB. So I think as a good practice, it would be wise to at least communicate and have this discussion with your employees if you are applying for the wage subsidy to find out if they've also applied for the CERB, because it could mean trouble if you're doubling up on both of those benefits. We were told that there would be a mechanism in place that would require employees to pay back their $2,000 CERB if they got rehired under the wage subsidy with respect to the same period of time. So that could be good news for employers in that at least it would mean that it's the employee's problem and not your problem. But there's also wording in the legislation to the effect that it could be punitive to the employers also. So I think it's still worth having the conversation with employees to find out if they've applied for the CERB or not. Lori, anything to add on that?
I have a pretty strong opinion about it that I'll try to keep to myself a little bit, but I would say beware, because the legislation does say employers cannot apply for the subsidy if employees are getting CERB during the same 4-week period. So, be careful there. Make sure your employees understand. There are instructions on CRA Online on how to pay back the CERB if you got it in error. I guess my concern is that I just don't see how employers can possibly hold employees to something that is an individual program for them. So I do have some concerns there. Some of our clients are suggesting that they might, put something in writing to their employees to say, we agree that if we're put back on payroll, we're going to stop applying for CERB and pay back anything we got in error. So they're putting that in their HR files. I don't know to what extent we need to go to, again, considering that there seems to be some mechanism on the way that'll hopefully fix it. I'm just worried employers are the ones getting audited, and what happens then. So I'm going to leave it at that with my opinion.
Okay, and the last thing I'll mention on this slide here is there's still a technical problem, I think, for particularly small businesses without a payroll function who have paid the owner managers as dividends instead of as salaries. One of the things you need to qualify for the wage subsidy is you had to have had a payroll account as of March 15th, 2020, and for owner managers to qualify, you essentially had to have been receiving some pre-crisis salary instead of dividends. And there's been no concession in the legislation or in any other administrative positions that would allow pre-crisis dividends to allow you to qualify for the wage subsidy. So that's, a lingering difficulty for some owner managers who pay themselves as a dividend instead of a salary. From there, we'll move on to something that's piqued a lot of people's interest, which is the anti-avoidance provisions that have come along with the wage subsidy. From the very beginning, we've been told by the Prime Minister and the Finance Minister that offenders will be punished and abuse is certainly discouraged. They don't want any business owners doing any sort of manipulation to maximize their wage subsidy or to qualify for it when they otherwise wouldn't. But those ominous messages were just messages. Now in the legislation, we've got a better idea of what the abuse provisions will look like. First of all, let's kind of reiterate what you're allowed to do. You're allowed to use consolidated revenue or unconsolidated revenue within your affiliated group. And you're also allowed to use a cash basis of accounting for revenue or an accrual basis. Those particular actions are okay and will not attract the abuse provisions. However, the abuse provisions that do exist are based on other types of potential revenue manipulation that you might try to do. And I'm paraphrasing here what the actual legislation says. It basically says that if you enter into a transaction, participate in an event, take an action or fail to take an action that has the effect of reducing your qualifying revenues, then you might have a problem. Also, it has to be reasonable to conclude that one of the main purposes of your action or inaction was to qualify for the wage subsidy. If that sounds like something that you're doing, you could be subject to a penalty. So just to kind of repeat that, you have to perform a transaction or an action or neglect to take an action that reduces your revenues. And if it doesn't pass the smell test, if it looks like the reason why you did it was to qualify for the subsidy, then you might have a problem. The purpose test here is that one of the main purposes of your action or inaction was to help you qualify for the wage subsidy. So again, one of the main purposes. It's not the only purpose or the biggest purpose, just one of the main purposes. So you might have had other reasons for changing the way revenue is recognized. But if CRA was able to say that one of your reasons was to qualify for the wage subsidy, they could penalize you. So if they do penalize you, what is the penalty? In the legislation, the penalty amounts to 25% of the overpayment of the wage subsidy that you received. On top of that 25% that's in the new legislation, there's existing long-standing legislation that can impose a penalty of anywhere between 50 and 200% of any benefit or refund that you've received inappropriately. So you take that 25% new penalty, add it on top of what could be as high as a 200% existing penalty, and you've got a pretty serious 225% penalty for any abuse. The key is, I do think this is going to apply just for actual abuse. I don't think you would get a penalty like that for, say, an honest mistake. You might have, say, calculated your revenue and figured it was going to be a 30% drop, and it turned out to be a 29% drop. You know, if that was an honest mistake or an honest error or new information came to light, I don't think you would get nailed as bad as you could. But if you fell into that abuse position that I read before, then you could be subject to those penalties. The other scary thing that we heard the politicians say was you could also get up to 5 years in prison for offenses. And in the legislation that's new, there's nothing in there about imprisonment. There's nothing in the background or about imprisonment, but there is existing legislation in the Income Tax Act that does refer to getting up to 5 years of imprisonment for making false and deceptive statements. So that's what the government could rely on. Now, having said that, you don't often see prison sentences for tax abusers in Canada. Generally, when you're hearing in the news about people going to jail over tax abuses, you're probably reading an American story and not a Canadian story. It does happen in Canada, but not that frequently. However, they do have certainly that that arrow in their quiver if they wanted to use it. One other thing, it's not on the slide here, that I'll mention is in the new legislation, this appears, and I'll paraphrase again. It says the minister, that would be the Minister of Finance, the minister may communicate or otherwise make available to the public in any manner the minister considers appropriate the name of any person that makes an application for the wage subsidy. So if you make an application for the wage subsidy, your business's name could be made public. That can give you a little pause for thought, I'm sure. Would they? It doesn't say that they will make it public. It says that they may make it public. So they usually use the word may to give themselves the opportunity to do something if they want to do it, but it doesn't necessarily mean that they're going to do it. So what that might mean is that they would publish the names of any offenders or of anybody who gets the penalty assessed on them. It could mean that they publish everybody's name, but I'm not sure that that would be likely to occur. But just do keep in mind that they do have that possibility to make your name public if you apply for the wage subsidy. So with that, do we have additional questions?
We do. One of them is there a special section for non-arm's length revenues?
For non-arm's length, sorry, go ahead, Lori.
I was going to say, I'm going to take that to mean, you know, the whole excluding them from the revenue test. So there's lots of rules surrounding non-arm's length revenues. They can't be included as part of the revenue test, which doesn't seem that complicated to me if what you're doing is calculating your revenue decline for one corporate entity. So if I have, let's say I have a parent sub relationship where there's revenue and also wages occurring in one of those entities, but there's also non-arm's length revenue. I have to kick out the non-arm's length revenue before I do my calculation on the decline. And as long as I meet the 15% for March, 30% for April and May test, I'm fine and good to go. Where this gets very complicated and worries me a little bit mathematically is because we have that option now to do the revenue decline calculations among an affiliated group, that calculation is a little bit daunting to me. And so I certainly wouldn't want to be trying to figure it out on my own. I'd be looking for help personally. But it's a bit of an odd duck when you try to do the calculation for an affiliated group. So I think, yes, there are clauses specific to non-arm's length. You can't include non-arm's length revenue in the test for the revenue decline. And furthermore, it gets even more complicated than that for an affiliated group.
Okay, maybe we'll jump to another one, and it's do we just attest to an employee being on paid leave?
So I like that question because first of all, I hate that question because we don't know the answer. But I like that question because it's exactly what we need to see in the application. If you think about it this way, if you have employees who are on leave and you are paying them anyway, and that means you qualify for some sort of rebate on your employer's share of CPP and EI, not to mention that you might be getting a subsidy for them that is 100% of what you're paying them. If you've made every effort to top up the other 25%, how are we going to swear to that on the application, and what is that application going to look like? I think in order to get the rebate on the CPP and EI, you're going to have to somehow attest to the fact that they've been on leave, but until we actually see the application, we just don't know.
Great. Next question is, if the employee pays back the CERB and the employer gets the subsidy, is this okay?
It sounds like that should be okay. Again, I do have an opinion. Greg, what do you think?
Yeah, I mean, I don't think there's really any mechanism right now to repay the CERB other than write a $2,000 check back to the Receiver General of Canada and send it in and explain that's to repay the CERB. But it seems like they can compel an employee to repay the CERB if you get caught later on. So seemingly, if you got ahead of them and repaid it voluntarily, that would be acceptable too.
Okay. Next question is about revenue reduction test. What if our business is taking a new shape due to the crisis and we're introducing a new business line under the same company? Can we still benefit from the wage subsidy for new employees that we previously did not have the use for?
Hard no from me. You can't use the wage subsidy to build your business. I think it's acceptable to replace employees that have left in your current line of business, but the wage subsidy is not intended to be a way to start new lines of business. Greg, what do you think?
So this is a new line of business in an existing company?
Mm-hmm.
Yes.
So the subsidy, I believe, is based on a company by company test as opposed to a business line by business line test.
True.
So I guess as long as the revenues overall are down.
I mean, it might be difficult to qualify because you'd have to, this sounds like a business that's building and growing. So I don't know how you'd have a 70% of your previous revenues while you were expanding and growing. But if you're adding payroll and had a 30% drop in revenues in spite of the fact that you're adding payroll, I don't think the rules look to a business line by business line or division by division. The rules look to your corporation as a whole.
I do agree with that. I'm just concerned about including new employees that are for a new line of business. We'll have to go back to the legislation and take a peek and maybe have a follow-up answer to that. What do you think?
That's a good question.
It is a very good question.
Yeah.
Okay, next question. We're an affiliated group of companies. The parent has payroll, subsidiaries do not. Parent has no income except through subsidiaries, i.e. non-arm's length. Is the parent eligible to apply for CEWS on a consolidated basis?
So affiliated, yeah, go ahead, Greg.
The parent's the only one with the payroll function?
Yes.
So it would be the only one that would be eligible for the wage subsidy because there was no previous payroll function in the subsidiaries.
Mm-hmm.
But I think they'd still be able to use, I don't remember seeing anything in the legislation that said that all of the companies have to have a a payroll function already in
don't.
order to qualify.
No, I agree, they don't.
Right.
So, but I think the problem here is that the parent doesn't have income except for non-arm's length. The parent is still eligible to
Oh, I see.
apply,
Yeah.
as long as you elect to use revenues of the affiliated group for the decline. So, but we believe that that's an all or nothing election. So, in other words, whatever the group of affiliated companies is, you'd have to include the revenues from all of them if you elect to do so, which is an option. And then you would still, of course, be bumping out anything non-arm's length. And then as long as the affiliated group on a consolidated basis qualifies, the parent company will be able to apply.
Okay. Next question. Can the Qs displace other revenues, funding? So assume is, I'm interpreting that as if you apply for that, does it displace other types of funding?
Well, it is taxable income to the recipient. So presumably, when you receive a wage subsidy, it's going to end up on your income statement at the end of the year as a revenue source. So if your other sources of funding are somehow tied to your ordinary levels of revenue, then potentially you'd have to factor in what you receive under the wage subsidy in determining your ordinary revenue level. So I wouldn't say no to that.
Okay. Next question. So this is a follow-up on that somebody's on leave. Are you allowed to have people on payroll that are on leave? And will you not be penalized for that? Also, if you have zero income as you have a mandated closure and are unable to pay the additional 25% to employees, do you risk being penalized?
So Brittany, I love this question. I love this question. It's one of the ones that we got in advance, and I'm glad that you're here to post it. So you are not going to be penalized for paying the people that are on leave. As a matter of fact, you're going to get rewarded for that because you'll get a rebate on the shareholders portion of the EI and CPP. And I mean, if you think about it, the whole spirit of this program is get people back on payroll. But if you've been mandated to close, you're not putting them to work necessarily. And we do know that you'll be asked to certify that you've made every effort to top up the additional 25%, but we're not sure how you'd be penalized if you can't. You know, how CRA comes back to audit whether or not you could have topped up the 25%. I don't know. I mean, you do have to attest to it. We fully expect the application to address this, but you know, so you are certifying to something when you check the box, but how to prove whether or not you were in a position to top up the 25%, I guess document your reasons, you know, why you couldn't would be my suggestion. Greg, what do you think?
No, I agree with that completely.
Okay, next questions. When do you apply for this program if you know that you do not qualify for March, but will for April as you've seen the rapid decline already?
Well, the application unfortunately isn't live at all yet for March or for April. Hopefully that's coming in the very, very near future. So for April, you would make your application after your, well, obviously after your April results are known and your April payroll. So you would be making that application in early May.
Yeah, I'd add to that if you're, be certain that you don't qualify for March, remembering that you do have options in terms of normal accounting method or cash basis, and also comparing March 2020 to March 2019 or to the average of January and February 2020. So first be sure that you don't qualify for March, which we do know that lots of entities won't. And then you'll do the calculation for April on its own and ensure that you've met that 30% decline.
Okay. Next question, an example, a contract for say 50,000 in April. Can I lower this and receive from CEWS instead, recusing the contract funding?
Well, that might fall into the anti-avoidance provision. Remember, the anti-avoidance provision said if you take an action or fail to take an action that has the effect of deliberately reducing your revenues, you could fall offside of the abuse provision. So I'd be careful, very careful about doing anything that's out of the ordinary course of business in order to qualify for the wage subsidy. Now, what this a business like that could rely on instead is electing for the cash basis of accounting instead of the accrual basis of accounting. You might have a $50,000 contract for the month, which is revenue to you, but you might not get paid for that until sometime in the future. So if you account for your revenue on a cash basis, that might help you qualify instead. And that's okay. That is one thing that you are allowed to do.
But yeah, again, you have to be consistent whether you use cash or accrual. Correct?
Right. You got to use cash or accrual the whole way along through all 3 months.
Yeah, and like we're hearing among the tax community, be careful. Any kind of trying to plan into getting the wage subsidy is likely to be considered abuse.
Okay. Next question, when you use consolidated income, do all companies have to be registered for payroll?
I would say no. The company that makes the application has to be registered for payroll prior to March 15th, and the others do not. But you do have to elect to use the revenues of the complete affiliated group. So there will be some kind of election required to do that.
Okay, great. If an employee goes on paid leave in the middle of their CERB period, do they need to return the whole 2,000 or partial?
That's a really good question. I mean, we haven't seen that mechanism yet. The CRA has put online different ways that you can repay it if you got it in error. Is it an all or nothing? My concern is that it is an all or nothing, which means if you got it in error, you don't qualify anymore, you're going to have to pay it back. But we don't have all of the complete details on that just yet. I'm worried that it is actually going to be whole 2,000.
Okay.
And remember, going on paid leave, in order to qualify for the CERB, you have to have had the stop work because of COVID-19. And you also have to have that 14 consecutive days off because of COVID-19 in the first period. So it'll be interesting to see what kind of announcements and new information comes to light over the next week or so. But just keep in mind, there's more than one thing to consider. You have to meet all of the criteria.
If you're collecting CPP, OAS, and other pensions and have a small business that is impacted / ceased operations, do you qualify for the CERB if you're making 1,000 or less on self-employment income?
So my understanding is that pensions will not count as employment or self-employment income for the CERB. You have to meet the other criteria, which would be stop work because of COVID-19, 14 consecutive days, all of those things. If your small business is a sole proprietorship, be careful about how you calculate the $1,000. Again, gross or net, not really sure. We're advocating for net. Greg, anything you want to add there?
No, I think you're on the right path. I think it's all a question of whether you're over or under that $1,000 per month to help to allow you to qualify for the CERB. Again, that's new as of just 2 days ago.
Okay, next question.
Yeah. And while before I'm just looking through the legislation on that question about the affiliated group and whether they all have to have payroll functions. And it refers to an affiliated group of eligible entities.
Interesting.
And an eligible entity is defined to include a corporation, but an eligible entity doesn't say it has to have a payroll function. Where you have to have a payroll function is later on in the definition of a qualifying entity, which is the entity that's actually going to be making the application. So if I piece that all together, it looks like it's safe to say you can use a consolidated revenue figure for an affiliated group of companies, even if some of those companies didn't have a payroll function. But to make the actual wage subsidy application, it has to be one of those companies amongst the group that had a payroll function.
Is anyone going to slap me? I mean, virtually, if I say this just feels a little bit like TOSI when we start going around in the circles in the legislation?
Yeah, it's
for
that way. Yeah.
For a program that seems really simple, the legislation is, you know, although not that complicated, it becomes complicated because of going around in circles a little bit.
Okay. It is my understanding that employees do not need to be actually working to qualify for CEWS. However, our association held a webinar this week where a different accounting group was used, and they were adamant that employees must work to qualify for wage subsidy and that we should be making every effort to pay the 25%, even if the company currently has no income, and we would go into debt to pay this 25%. Any clarification on this would be appreciated.
Well, I would disagree with the first point that they have to be working. In fact, there's explicit legislation that allows you to recover your CPP and EI for employers who aren't working. And on the second point, I guess there's sort of a soft agreement with that you're supposed to make every effort to top up the wages, but it's not a hard and fast rule.
Agree. I'd be hard pressed to be, if I were a small business owner and I were trying to decide, am I capable of topping up the 25%? If it means that I have to incur debt to do that, I'd really have to think long and hard about that. I mean, if I qualified for the CEBA $40,000 no interest, partially forgivable loan, I'd feel better about using that to top up employees. But if I was actually, looking for new sources of financing, incurring interest costs and other obligations to do that, or, chewing up my cash reserves, I don't know. I think each company has to give this some thought, and the key that, what we're hearing is you need to make every effort to top up the 25%, and we don't really know what that effort looks like.
Yeah. But again, on the first point, from a policy perspective, the whole point of this is to try to make sure that people are still being paid. But then there's the other big policy that is trying to encourage people to, stay the blazes home.
Stay the blazes home.
So
that's right.
Ordered my T-shirt already.
Yeah. So paying people to stay home is consistent with, sort of the health policy and the economic policy at the same time.
Mm-hmm.
All right. Another question here. Assuming all other eligibility requirements are satisfied, is somebody eligible for the CERB if they recently sold their business but cannot find new work now due to COVID limitations/restrictions?
Well, you're out of work, and you are presumably you've earned $5,000 in the prior year, but there's also something, I'll have a look at it.
Yeah,
you're supposed to be out of work because of COVID, right?
Mm. However, the news that's coming out this week and flying at us, a few times a day, does imply that there might be hope here. Not 100% clear to me yet, but I have to be quite honest, I can't keep up with all of the changes to CRA's website and the news that's coming out, whether it's just an announcement from the steps or something I can read. Yeah, if you sold your business and can't find work, Greg, would you compare this to the person whose EI has recently run out and they can't find work because of COVID-19? I don't know. Maybe there's a little bit of risk there, but maybe there's also a little bit of hope.
Yeah, I mean, the legislation right now says you're supposed to have ceased working for reasons related to COVID.
Yeah.
I don't really see anything there that says, or you can't find work for reasons related to COVID.
Yeah, but
So,
everything that they're changing so quickly, you know,
yeah.
but are we going to actually even see updated legislation or administrative positions before all of the periods run out for CERB? Like it's, you know, if we just follow the legislation, it doesn't match the things that are being announced and posted online. So it's maybe a bit of a stay tuned, which is sad because the time to apply for CERB is now when you need it, not 3 months from now when they get the legislation fixed.
Right.
Okay, another question here is a kind of a combination of CERB versus queues. So the question is also, can you have only select individuals on payroll and claiming the queues and have others off on CERB, or do you have to have all staff on payroll?
I love this question. So you do not have to have all staff on payroll. The people you bring back on payroll can't also get the CERB at the same time. But some small businesses would say, well, it makes sense for us to bring back certain of our employees on payroll, key employees, skilled, experienced employees that we want to ensure we retain, but it might not make sense to bring everybody back. I don't believe there's anything that says you have to bring everybody back.
Yeah, it certainly would be unfair to the person who didn't get brought back if they're unable to get CERB because their former colleagues are still at work.
Exactly.
So I think it's on an employee by employee basis, and the ones who you weren't able to bring back and aren't receiving payroll and aren't working for a 14 consecutive day period would qualify for the CERB.
Mm-hmm. And not to mention, there are industries where, you know, our clients are faced with employees who don't want to come back, even though the offer is on the table, because they're content to receive the $2,000 CERB and stay home. So you know, not necessarily going to get all employees back on payroll anyway. The CERB is an individual program, and so employees kind of have the choice there.
Okay. Next question has to do about getting reimbursed for the 75%. So how and when do we get reimbursed for the 75%? And what if we don't have the cash flow to pay that 75? Are there options?
Yeah. So the first question is, last week, the finance minister, Mr. Morneau, said the money would start to flow in 2 to 5 weeks. And that's, I think, about a week ago we said that. So now I think we should assume it's 1 to 4 weeks. Now we don't have an application even yet. So maybe it's not 1 week, but maybe it's something less than 4 weeks. So that's sort of the expectation. Sorry, what was the second part of the question, Dan?
The second part of the question is, what if we don't have cash flow to pay the 75%?
Yeah, right.
Options?
So that's the trick. It is a refund. So you got to pay first and then get your money later back from the government. I'd say the number one option to come up with that money is to apply for what's known as the CEBA loan, which we discussed in last week's webinar. This is the $40,000 loan that you can get through your bank, of which up to 10,000 of it is forgivable. That program is live. That money is starting to flow now. You apply for that through the bank, but that could give you sort of the jump start that you need in order to make payroll in the first place before you get it back in the wage subsidy in 1 to 4 weeks.
And that's been lowered. The bar has been lowered for that loan as well, just recently too, with payroll being now 20,000 instead of 50. So next question, what if shareholders have taken a wage cut to keep the employees employed? Will you be penalized for going back to regular wage amounts?
Nope.
You'll pay tax on it, that's all.
Keep in mind, shareholders do have there is a special calculation for non-arm's length employees. So shareholders' calculation will look a little different depending on pre-crisis wages as part of that calculation. So if pre-crisis wages have been reduced post-crisis in order to allow the employees to get paid instead, then it'll depend on the maximum $847 a week, or the pre-crisis earnings, or the amount the shareholders are actually getting paid. So be careful with the math on it, but there's no reason to think you'd be punished for putting shareholders back on their normal pre-crisis earnings. You're still going to max out at the $847 a week.
Right.
So I know we've reached sort of the 11 o'clock mark, but I did publish one more question at least to start. If I meet the revenue test for March and have employees that I paid from March 15th to March 23rd and then laid off those employees, can I take the Qs for that pay period? I know my employees filed for EI after March 23rd and were switched to CERB by Service Canada.
I think this is fine because the March 15th to March 23rd payroll is within the first period for the wage subsidy. The fact that they were laid off after that, you're not trying to include wages that they didn't get paid. I mean, you have to meet the revenue test, of course. And then from the employee's perspective, you've got, they're presumably meeting the 14 consecutive day test, no work, no pay due to COVID-19, and have had their, got their EI applications in. Now the trick will be if you want to hire them back, how that's going to interact with CERB and their EI. So, give that some thought. But as far as including that pay period, March 15th to 23rd, I don't see any reason why you wouldn't, as long as you meet the revenue test.
Okay. Here's another question. For a real estate agent who normally recognizes revenue based on closing date, if they had pre-sales in the 2019 year end and was not recognized in 2019, and the closings will happen in March, April, May of 2020 year end when they normally recognize revenue, can you use accrual basis calculation and say that revenue related to a period in 2019? And that way they would qualify for the 75% wage subsidy.
Whew.
That's a long one.
So normally recognizing revenue based on a closing date, pre-sales in 2019 not recognized in 2019 because the closing date was in 2020, presumably. Closings then will happen in March, April, May. So now you've got your normal accounting method is saying that those revenues are falling into 2020. So I would say the options are you use your normal accounting method or you use cash basis, and you're maybe in trouble either way on this one. Greg, what do you think?
Yeah, the math might not work for you either way is the problem. Yeah. But I guess it's, if you could say you had earlier closings and you're accruing your income on the earlier closings, and then you had a slow March where there's nothing to accrue, that's where you'd come under the qualification. Yeah. So yeah. I'd give a qualified yes for that one, but I might want to have a few more minutes to think about that one.
Yeah, it's a very good question, but it's a little bit hard to address without fully seeing the picture and the numbers. So I think that's it as far as time. We did want to try to keep this one to as close to an hour as possible. I know there are some unanswered questions in the queue, and I think that if you did ask them in advance, I've got them in my email and will reply with some comments. If they are new questions that have come up from attendees, then we'll do our best to answer them somehow. You can feel free to reach out to us by email, on LinkedIn, any way you can find us. There's some useful links on the page on the screen for you. The slides and the recording of the presentation will be available on our website as soon as we can get them on there, hopefully today, but certainly over the next few days. So if you're frantically trying to write down the links, well, we'll get them published for you so you can get at them again. They're the most recent bits of information, which of course maybe are all going to change by tomorrow anyway. Any closing remarks?
There is, I know, a very fulsome FAQ document on the wage subsidy that's going up on our website. I don't think it's there yet, but perhaps by the end of the day, it'll be up there.
Yeah, I'm really
I think
looking
it's,
forward to that.
yeah, so I think it's aggregating a lot of questions and answers that have come throughout the Baker Tilly network across the country. And it might have answers to any questions you could think of in there. So please check in with our website perhaps later on today or even on the weekend to see if that document's up. I've got high hopes for that one.
I really can't wait for that one. That I think it's going to be very helpful.
Yep. And really great questions, and thank you.
Yeah, thanks everybody for participating and providing those questions. Really good and helpful for the masses. So anything you want to say in closing, Greg, Dan?
If I'm not mistaken, I think it's Friday, so I'll say have a good weekend.
Oh, weekend? Yes. What's that? Yes, happy Friday. Stay the blazes home. I have nothing else to add.
Yeah, thank you all for joining us.
Yeah, thank you.
Thanks.